It does look like, as we just talked about, the services side of the inflation print came out slightly softer than expected. So as we talked about, 2/3 of the basket is services. And if that part of the economy is starting to just cool a bit, that will be reflected in the broader CPI basket. I think a two handle, to your point, we're still closer to that 2% target than we were really any time over the last year or so. So that is also probably a benign factor as we think about inflation. But I'll finally also note, as we think about companies and how they're managing tariffs, certainly during this period of pause, it is possible that companies continue to build inventories. And as they are building inventories, they don't have to then pass through as much of that price increase. And so we could see, a lot of companies even thinking about Christmas inventories. If that continues between now and July, companies have adjusted, they're innovative, they find a way around some of these headwinds that we see in the economy.
Does that hurt them later, though, if the consumer winds up getting hurt and then they're stuck with all that inventory?
It will come down to consumer resilience, and thus far, consumption has held in there. We look at second quarter GDP, potentially consumption looks above 2%, higher than the first quarter. So we are seeing a consumer that's relatively resilient. But yes, overbuilding inventories can come back to bite you. But from a consumer perspective, it's not a bad place to be. They're not going to experience some of this dramatic move in tariffs that we might have seen.
Because you know what overbuilding inventory means for me, Paul?
Sales.
There it is. There it is. Oh, yeah.
And we all know
this.
Alex and her sales. Not one of the 73 forecasters in Bloomberg's survey had penciled in a 0.1% core CPI increase. That's according to Chris Anstey, senior editor for Bloomberg News on the Top Live, which is just awesome, by the way, folks. If you got a Bloomberg terminal, the Top Live, folks, when big stuff crosses the tape, they're all over it. So, Mona, just real quick, we'll let you go. But, I mean, does this, kind of a little bit more of a benign inflation outlook, does it kind of change the way you guys are going to be talking to your clients in every county of the United States?
Yeah, look, I think this one print alone doesn't change the overall narrative. What we will say is we're up 20% plus in a pretty short period of time. Could we get more bouts of volatility ahead? Absolutely, especially as we digest some of this summer news, post 90-day pause, et cetera. But as we look towards the back half of the year, we do think the setup back half into 26 is not bad. We're seeing potentially a Fed that could be cutting rates. We are seeing potentially a tax bill that is in place and supporting on the fiscal front as well. And then, of course, companies will have a little bit more certainty, and the earnings profile may reaccelerate in 2026. So we do think volatility can provide some opportunities for our investors.